What is happening, everyone, and welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The pace of innovation and market movement is absolutely relentless, and if you're not plugged in, you're missing out on the biggest shifts shaping our financial future. Today, we've got a lineup of stories that are not just news, they're a glimpse into what's next, and you absolutely need to hear this. Get ready, because the next few minutes are packed with insights you won't find anywhere else. We're diving deep into the resilience of Bitcoin, exploring groundbreaking developments in its programmability, dissecting the latest market sentiment, and uncovering bold corporate strategies that are redefining value. This is Bitcoin Bulletin, and you're about to get the inside scoop. First up, we're talking about Bitcoin's incredible staying power. Despite market fluctuations, this digital asset is rewriting the rules of financial security, with its hash rate soaring and key support levels holding strong. We'll break down what this resilience means for the future and how major players are investing in its infrastructure and even its potential as a national reserve asset. Then, we shift gears to a major leap forward in Bitcoin's capabilities. A significant funding round is set to unlock new levels of programmability, potentially transforming how we interact with Bitcoin and bringing DeFi closer than ever. We'll explore the technology, the players involved, and what this means for the entire ecosystem. But that's not all. We'll also dive into the latest on-chain data, revealing whether we're seeing a strategic capitulation that's clearing the path for future gains, and uncover how a major Japanese company is making an $881 million bet on Bitcoin as a hedge against inflation and a weakening yen. Stick around, because these are the stories that matter. Don't forget to hit that like button, subscribe, and ring that notification bell so you never miss an update. The unbreakable network. Bitcoin's hash rate is hitting near all-time highs, proving its incredible resilience even as the price sees a slight dip. This surge in computational power is a massive indicator of network security and investor confidence, keeping Bitcoin firmly above the crucial $110,000 support level. We're seeing major expansions in mining operations, like Hive Digital Technologies doubling its production capacity in Paraguay, signaling serious institutional backing and infrastructure growth in the mining sector. The broader crypto market is also showing signs of recovery, with analysts pointing to the current price action as a healthy consolidation within a larger bull market, eyeing $112,000 to $115,000 as the next key resistance points for potential new all-time highs. Beyond mining, innovative projects like Bitcoin Hyper are developing Layer 2 solutions to boost Bitcoin's utility, making it more accessible for developers and creators. Even tech giants like Alphabet are getting involved, taking equity exposure in Bitcoin miners. On the geopolitical front, the Philippines is considering a bold move to create a strategic Bitcoin reserve, aiming to hold 10,000 BTC to reduce its reliance on the US dollar, following El Salvador's pioneering adoption. These combined developments paint a picture of a maturing Bitcoin ecosystem, increasingly recognized not just as an investment, but as a strategic financial asset. But what does this enhanced programmability mean for the everyday user and the future of decentralized finance? Prepare yourself for a massive funding announcement that could change everything. Unlocking Bitcoin's potential. Hemi Labs, founded by Bitcoin pioneer Jeff Garzik, has just secured a massive $15 million in funding, a move poised to dramatically expand Bitcoin's programmability. This capital injection is set to accelerate the development of its core technology, the Hemi Virtual Machine, or HVM. Think of the HVM as a sophisticated layer that embeds a Bitcoin node directly within an Ethereum virtual machine environment. This innovative approach allows for the execution of smart contracts and complex transactions on the Bitcoin network without altering its fundamental protocol. Garzik's vision is clear. Bitcoin doesn't need to be reinvented. It needs the right tools built around it to unlock its full potential. Hemi aims to provide DeFi protocols with a familiar and secure way to build on Bitcoin, eliminating the need for developers to learn entirely new skill sets or compromise on the network's inherent security and decentralization. This is a significant step towards transforming Bitcoin from a primarily store of value asset into a more active participant in decentralized finance. The traction is already immense, with Hemi boasting over 100,000 verified users and a community of 400,000 members, supported by more than 70 partners including major players like Sushi, Layer 0, MetaMask, and Redstone. The total value locked in its ecosystem has already soared to an impressive $1.2 billion. This funding round follows Hemi's mainnet debut in March, which saw an initial commitment of $440 million. The company's growth is a clear reflection of a wider trend in the crypto space, as numerous projects are actively seeking to leverage Bitcoin's colossal $2.3 trillion market cap for DeFi applications. Competitors like Lombard, with its liquid staking token LBTC, and Bob, a hybrid chain merging Bitcoin and Ethereum, are also building critical infrastructure to bring Bitcoin into the active DeFi fold. This development signifies a pivotal moment for Bitcoin, potentially ushering in an era of enhanced functionality and broader adoption within the decentralized financial landscape. But is this market expansion fueled by innovation or by a strategic shakeout of weaker investors? We're diving into the on-chain data that tells a fascinating story. The Great Bitcoin Rebalance. Bitcoin is currently navigating a critical juncture, with its price hovering near significant resistance levels, prompting analysts to debate whether the recent peak signals a short-term top or simply a pause within a robust bullish trend. The cryptocurrency is inching closer to key resistance around $124,500, while maintaining a crucial foothold above the 20-week exponential moving average, EMA, which has historically acted as dynamic support near $108,000. Recent dips to around $112,000 have reignited the discussion about the market's health. On-chain data reveals a fascinating divergence in holder sentiment. Newer investors who have held Bitcoin for less than a month are experiencing an average unrealized loss of approximately -3.5%, leading to increased selling pressure. Conversely, short-term holders, those with positions between 1 to 6 months, are still in the green, holding an average unrealized gain of +450%. This dynamic is being interpreted by many as a classic capitulation phase, where less committed investors are exiting the market, potentially clearing the way for stronger hands and establishing a more solid foundation for future price appreciation. Analysts are calling this a bullish structural development, suggesting that the transfer of Bitcoin from novice holders to more experienced participants could significantly boost future demand. Adding to the market's volatility, a $70 million liquidation event on Binance, triggered by a price drop below $111,000, led to a sharp decrease in open interest. However, on-chain analysts view this as a positive market health check, arguing that the removal of over-leveraged buyers and a reset of open interest creates a more balanced market structure with latent upside potential. The next key liquidity cluster is identified between $117,000 and $118,000, which could act as a magnet for price action. Looking at longer-term probabilities, models suggest a low, 5% chance of Bitcoin falling below $41,000 by 2026, with current drawdowns being modest compared to historical corrections. Furthermore, governments worldwide are increasingly viewing Bitcoin as a strategic reserve asset, with countries like El Salvador and Ukraine already integrating it, highlighting its growing acceptance despite regulatory uncertainties and volatility. Speaking of strategic asset adoption, a major Japanese company is making an enormous bet on Bitcoin to hedge against its own economic challenges. Get ready for this multi-billion-dollar move. Japan's $881 million Bitcoin bet. Metaplanet, a company listed on the Tokyo Stock Exchange, is making a bold strategic move, planning to raise a staggering $881 million through an international share issuance. The primary objective: to significantly expand its holdings of Bitcoin. This massive capital injection is intended to bolster its BTC treasury and serve as a crucial hedge against the persistent weakness of the Japanese yen and escalating inflationary pressures within Japan. The company's ambitious target is to accumulate over 210,000 BTC by the year 2027, a move that would represent more than 1% of Bitcoin's total circulating supply. This strategy is not just about acquiring more Bitcoin. A substantial portion of the funds, around $440 million, will be channeled into establishing a Bitcoin income business. This innovative venture involves generating revenue by selling covered call options on its existing Bitcoin holdings, adding an income stream to its long-term accumulation strategy. The share offering is being conducted via overseas placements targeting institutional investors, ensuring a broad base of support. Metaplanet's CEO, Simon Jurovich, has emphasized the company's commitment to adhering strictly to all legal and regulatory requirements during this fundraising period. This strategic pivot follows Metaplanet's recent inclusion and upgrade within the FTSE Japan Index, moving from a small-cap to a mid-cap stock, and its impending addition to the FTSE All-World Index. These upgrades reflect the market's positive reception to Metaplanet's Bitcoin-centric strategy and its robust performance. The company has demonstrated a disciplined and aggressive approach to Bitcoin accumulation, consistently increasing its BTC per share through capital markets. Metaplanet even measures shareholder value using metrics like BTC yield and BTC gain, showcasing a deep integration of Bitcoin into its core financial philosophy. This corporate adoption signals a growing trend where traditional companies are increasingly exploring Bitcoin as a fundamental reserve asset, moving beyond its perception as purely speculative digital currency. And that's a wrap on our top stories for today. But before you go, let's do a quick recap of the biggest headlines you need to remember. Bitcoin's hash rate is soaring, proving its resilience and network security. Hemi Labs just raised $15 million to unlock Bitcoin's DeFi potential with enhanced programmability. On-chain data suggests a strategic capitulation phase is clearing the way for future Bitcoin gains. And Metaplanet is betting $881 million on Bitcoin to combat inflation and yen weakness. If you found this information valuable, please smash that like button, subscribe to Bitcoin Bulletin for more cutting-edge updates, and hit the notification bell so you never miss a beat. Follow us on all social media platforms for real-time news and analysis. We'll see you in the next one.